And that's like the first step of getting on the right side of how things work.
Yeah. You know, actually, because I think that's super interesting. Let's get deeper into the example.
Okay.
So, and let's even use the case that you gave, which is I'm an assistant in my 9 to 5, and then I'm just going to assist a few other people from 5 to 9, and that's going to be my business. So if I'm that person, I can literally just start like an LLC, and then use that to do like these kind of gigs on the side.
Yeah.
And then how do I even figure out what I could use as an expense from doing that against my W-2 income?
Yeah. No, that's a great question. So the first thing I want to dispel is most new entrepreneurs think that because their LLC is not set up yet, that they can't take advantage of the tax deductions or expenses that they use in their business. That is not true. When you walk out of your job and say, "Hey, I'm a business owner," congratulations, welcome to entrepreneurship, right? You're automatically a sole proprietor, whether you file any paperwork or not. I want you to file an LLC though, because an LLC separates you, the person, from the business. So if anything was to ever happen to you, you get sued in your business, nobody can touch you personally. So the first myth I want to dispel is whether you have your LLC or not doesn't have anything to do with the amount of tax deductions or savings you get. Number two is now that you have the LLC in place and you're like conducting business, you get your first paycheck from that entrepreneur. What I need you to ask yourself is, what expenses have I incurred since starting this business that is both ordinary and necessary to operate this business? So for example, like if you bought a new computer because you don't want to use your work computer for your side business, that computer qualifies as ordinary and necessary to operate your business.